In the last video, I called out 12,180 as the immediate resistance level of the Nasdaq 100. We can see from the daily chart, this is where the sellers came in, with the 40-day moving average in blue coming into play as resistance. Following price action has and continues to work well when there are no fundamental catalysts in the market, which has been the case this week again. Even the release of the core personal consumption expenditures price index, and that's the Fed's preferred inflation measure, which came in at 4.7% in May, year on year, slightly below the estimate of 4.8%, had little impact on Nasdaq 100 overall. Inflation remains a problem, not just in the US but globally, as the Eurozone inflation numbers came in hitting a record in June, and it's likely we'll begin to see the ECB follow the Fed's lead in hiking interest rates. Going back to the charts, I mentioned in the last video that we would pull back to retest the 11,688 level, which we did, but that if we lost this level, the next areas of support would be around 11,500 and 11,280. The Nasdaq hit a weekly low of 11,316 this week, so just shy of that 11,280 level. The other thing to note is price is back below that key blue trend line, which you can see here held into the close. This is significant and will act as a key hurdle for bulls. In terms of levels to watch into next week, the blue trend line is a given. If price can't get above that, we sell from the off from next week, and a retest of the low of 11,037 becomes the target. There is some minor support at the 11,280 level, but it's the recent low that will be the target. If and only if the Nasdaq 100 makes a new low, further downside level to watch would be 10,840, being the 200-week moving average. The more likely scenario in my view is that we actually rally at the beginning of next week with the US out for public holiday, so volume would be lighter than normal, in which case we break above the blue trend line, retesting that 11,688 level, with a potential push as high as 11,768 being the 20-day moving average, at which point the sellers come back and we begin the next leg lower. Either way, however you look at it, the bias remains to the downside. Continue to follow price action and know your levels in order to manage risk. With that said, thank you for watching, and do hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.